Welcome back, everybody. Anthony Crudele here, joined live in the studio in Naples by Big Brother Pax, independent trader and trades, who was here with us this morning and who's been with us here all week. I can't wait to hear more about her adventures in Naples. This morning, this morning we talked about turtles. She hasn't seen a gator yet. Did you see a gator during lunch today or no?
No. I was by the pool at the hotel today for lunch, just enjoying the calm before the storm for FOMC, basically.
Yeah, I mean, that's what we're going to talk about. I see you have your Naples attire on now today.
I know. I'm telling you, I walked down the street, like, what is it called? Fifth Avenue here, also the main street, and I was sticking out like a sore thumb. I was wearing all black. Everyone else is wearing loose, light clothing, white clothing, and I'm like, okay. I passed by a boutique and I just bought these pants and I left the boutique wearing the pants and I felt much better.
That's hilarious. That's odd. That's what I would do.
And then I felt much better walking into an Italian restaurant for dinner.
That is so on point of what you would do, 100%.
I was thinking about doing that now.
So a quick story we have to share about Pax. Pax, this is live, by the way. We're not being recorded. So funny story. Pax and I, we obviously go a way back. I mean, we've known each other for nearly 30 years now. So which is crazy because I mean I'm only 37 and what you're 42. Yeah. It's pretty incredible. No, so we were doing when he came in today. We were talking about just funny moments we've had in the past because you know anytime you guys are doing like recordings, it's fun, right? You're going in there. He and I were doing trading, and so one time we're in there. Me and him were sitting down. And we're sitting next to each other. Remember that picture with you in the pit right behind, in between us?
Yeah.
And we're sitting down there. Everyone's like, all right, ready? Let's go. We're recording. And Andrew is one of our production guys. He's like, all right, Pax, don't worry. If you mess up, just keep going. Just keep going. So we're sitting there, we're talking, and I'm listening. We're like 5 minutes in, right? And Pax is sitting there, and he goes, cut. And all the camera guys, we had a huge studio. Everyone's going, who's saying cut? The guy comes in, he goes, Pax, you don't say cut. We say cut. You just keep going. He goes, no, I got to start over. This is it. I didn't like it. And I will laugh about that for the rest of my life.
I'll never forget it either. It was very embarrassing.
Oh, man, but I see you're nice and tan. And
I'm trying.
Were you out at the pool in Orlando?
No, I was out in the sun watching my son play baseball. So no pool time, just watching junior college baseball.
Yeah, that's really exciting. And just so everyone knows, he's been chatting with Tanya, and he's been watching his son play baseball on his phone. So he's fully engaged with his son's a sophomore in college, and he's playing in a winter game.
Tournament down here, yeah.
Yeah, that's really cool. So, guys, it's FOMC day, and, you know, it's really fun I think this conversation here, Pax, you know, you and I come from the old school. Tanya's the new school. I know you've just gotten a chance to meet her, but I've gotten a chance to get to know her and watch her on YouTube. And she is doing a lot of the things that you and I were taught early on as traders. I mean, she's very patient. She's very disciplined. I think, you know, she's way ahead of the curve with a lot of the learnings that I think a young trader would need to get, I think, to be successful. And she's done an amazing job with her content creation. I want to kind of start off with what we've done in the past, like preparing for FOMC, and then maybe we'll piggyback off of what Tanya does. And not, you know, you and I, we used to play cards, we used to do whatever, but there was more to it. Part of that was psychological, right? Like we did that because we were trying to almost burn off some of that nervous energy, because no matter how many times you go to the restroom before FOMC, right, when you get there, you're nervous again. Your nerves just take hold of you, right? I remember guys running back and forth from the pit, and it's just that nerves, that anxiety. Talk to us about preparing for an FOMC day.
Then or now?
What we did then that carried over to now.
Well, you know, there was a really good point about keeping our kind of our headspace confident, carefree, fearless, and focused, or just kind of relaxed, you know, especially going into the Fed. And who knew? So after I tweeted the other day about the worst day of my trading career when I lost $1.5 million, and you know, that wasn't a Fed. It was a Fed decision. It wasn't a Fed day. It was the very first trading day of the year. So ever since after that, I have always, since 2001, I have always taken Fed days either off or very, very easy, even on the floor. So if I had existing positions on, you know, like if I was long from previous day's opening range or short from a previous day's opening range, depending on how much lead I would have on it, I would flatten or I'd keep it, you know, but that would be the only stress that I would carry into it, because I had my worst trading day of my life on a Fed decision day. So, because of that, I've always just taken it easy. But now I will trade a Fed day. December 18th, last rollover, in December when we had that Fed day, we broke 245 points in the S&P on Powell's during the presser. I had worked out in the morning. I knew my levels. I knew what prices I was going to trade. And I knew what direction I wanted to trade in. And when we started breaking from 6,100, basically in the S&P down to, I forget what the low was, 59.10 or something. 59.10. We had 45 15-point rotations, 245-point break. I was ready. I was prepared for that. It was just looking for those simple, rotations down. That ended up being the best trading day that I had last year. So I was confident, carefree, fearless, and focused. I was relaxed. I'd worked out in the morning. I went to mass in the morning, prayed my rosary in the morning. I was ready to go. And, when the market hit, it was just one of those days where everything worked, For the most part, I don't do anything, though, on Fed day. I'm prepared on either side of the market. If we start getting moves and we start taking out levels, then I'm prepared to trade those. But if we don't do anything, then I sit, put my feet up, and listen to Lionel Richie sing Easy Like Sunday Morning.
Two things I take from this before we get to telling you. One is burning off some energy early, working out. Then Tanya talks about taking her walks and, getting sunlight in your face and your eyes. And just mentally being in a good place, I think isn't so important. You talked about, with the rosary, again, calms you down, takes you down to a level, and then preparation through our work, and then being prepared really to do nothing. I think that's the one thing. We prepared to do something, but we're prepared to do nothing. Tanya, your preparation, I think this is where I think really puts you above the level of so many other traders, is from what I've seen, is that your preparation is the same every day. I literally can go through automatic now that I've been doing this with you. I know exactly what you're going to say in a sense, right? Like your preparation is very clear.
Yeah.
Talk to us about an FOMC day and how maybe that's different.
For FOMC, I'm definitely taking a look at, we drew out our levels in the morning, and it does seem to be playing out so far. We have a nice rejection on the hourly and the 4-hour chart right now, but I basically envision what I think I might want to see, maybe like I've seen, I'm thinking lower prices down to 56.40s. But of course, you never know what's going to happen when the news releases. And also, I like to wait until Jerome Powell starts speaking at 2:30 because typically between 2 and 2:30, I just kind of let the market do the market discovery and the manipulation. And I don't really want to be part of that first move. I remember when I was first trading, I actually was pretty ignorant about the Fed days, and I definitely lost money doing options trading back and forth. And then I kind of transitioned to just taking the day off because I wanted to just come back and see what happened, just force myself not to take a trade and then come to see the aftermath. But then, now I definitely trade it. I just am super patient, and I know exactly what I want to see. And if I don't see it, like you guys said, then you just hands off the mouse. You don't touch anything until you do see your setup. But I have a question for you, Pax. Is on that day you said the Fed day. I mean, it was not a Fed day, but it was a rate decision. Was that out of nowhere, or was that in the economic calendar?
No. So the tech bubble had burst and everything was falling. You were what, 3? So
I was 3.
The tech bubble burst, and we had the all-time highs were 5,000 in the NASDAQ, and at that time I was in the NASDAQ pit. So we were trading, we broke 50%, so we were down near 2,000 from 4,800 or 4,900. So, there were rumors that Greenspan was going to cut rates, but we all just kind of expected at the next FOMC meeting. So the very first trading day of the year it was January 3rd or 4th. I can't remember the date, but it was a Monday, and we had just nobody was in the pit. I came in late, so we're sitting around, and I thought, okay, well, I'll try to make $10,000, $15,000 and leave. So we're sitting around talking, and even on 20 sold. So I sold 20, which would have been 100 minis. So I sold the 20 lot, turned around and just started kind of talking again. And then I started down ticking. I sold 2, trying to get it down to touch off some stops or create some momentum to the downside, painting the tape a little bit, making it look like a topside rejection, and the market was coming down a little bit, try to touch off some sell flow, cover my shorts, and then go eat, and, we're sitting around talking and all of a sudden, like there was I can't even describe it, at first the buzz, and then then a roar, and we were all just bidding them up. A broker, we were trading it like at 22,000, so around even, and a broker was offering Harry was offering.
Oh gosh, do we have a story? Harry the Hat?
Yeah, he was offering 16 and
Harry
even.
the Hat.
So
Yeah.
I yelled, "Buy him!" And I was first. I know I was, but I didn't get him. And then the next trade was, like 50 higher, 60 higher. And I asked Jimmy Lafredo, who was the trader for Susquehanna, give me an offer. And he, yelled and he swore at me and said, "I'm short too." And then he bid it up 50 points. I bid it up 50 points, and I got a couple off. And then he made an offer at like 22 even, 200 higher. And I did too. We sold a few more. That was a mistake. And then we were just racing each other. 23 even bid, 24 even bid, 25 even bid. Now some offers are coming in again. I covered all my shorts at 26.5, which was the dead high of that day. And it was like a million and a half. 2 brokers were I'll buy 100 at 26.5. I'll buy 100 at 26.5. And DPC, Dean Carlstone, said, I'll buy 100 at 26.5. I sold you 100 at 25.5, 100 lower. And in my mind, and that's 500, well, no, that's 1,000 minis, right? What would 100, what would have
500, yeah.
500 minis? So in my mind, I'm hearing like a cartoon. And everything was in slow motion.
Slow motion.
When really it was all, fast. And I just said no. I didn't know. I said no. Because I didn't know whether I was down $1 million or 10 million. I had no idea how much money I was down.
How quick did this all happen?
5 minutes, 10 minutes.
my
It seemed like 30 seconds.
Yeah.
And it was all my money. I've never traded money for anybody else. It was all my own capital. And this is money I never dreamed I'd even have 3 years previous to that. So I knew that, at that point, 10 million, if I lost 10 million, it would have hurt. Maybe we would have survived it. $1 million, that would have sucked too, but I'd be okay. I gave my clerks my cards and I walked out. I don't think you asked for the whole story.
But I liked it.
About, about the day. So it was so Greenspan cut rates.
Yeah.
On
So
a
basically,
surprise,
that was just
50
a surprise.
basis points.
You did not anticipate what time that was
No.
going to happen, or that it was going to happen at all that day.
Happened
rough.
around lunchtime too. So nobody was in the pit. There was no liquidity. It was a 50 basis point cut, and it was a surprise cut. He did that to get the biggest possible rally out of the tech stocks that he could, because there was no liquidity and nobody was there to keep it lower. And the few of us that were short had to really bid the market up. We gave that rally back and then some. I mean, we over the course of the few weeks, but oh man!
Remember how information was so different then? I think that's something that really, I mean, obviously, first of all, Greenspan
we
was
had no access to it.
Wow.
I didn't know.
Yeah, and Greenspan was the only Fed chair that I'm aware of that did surprise stuff. I don't think Yellen
I think
did.
Volcker
No, I'm
did.
saying since
Oh,
then.
since we were trading out.
Yeah,
No,
Volcker
that was the
a
last
little
one, I think.
touch before me.
Right, yeah, me too.
Boomer.
Oh, God. Not a boomer. Gen X. Gen X.
Gen X. Right, we're Gen X. So there's been a lot of talk of that lately.
Yeah.
Pax, we're getting gray. Well, you're kind of a little.
I'm there.
You're a little more than getting gray, but
You just get that little poof in the
yeah,
front.
I know. Literally, I'm split right down the middle. I'm at the I'm like a fib right now. I'm at 50%.
Looks like you color it.
Yeah, great. I know. My nephew's like, "Oh, Uncle Tony, what happened to your hair?" He's like, "Is that like a highlight?" I'm like,
Yeah, looks nice.
So getting information and processing it. But here's the one thing that stands out, and I think it's Tanya. This is what we've all talked about. When it comes into a Fed day, you have to expect unpredictable things that you didn't think could happen,
Yes.
and let alone
That's why I
this
don't
is a
trade.
time when nobody even knew it was coming. But again, look at what happens, right? This is a time where, of course, liquidity is going to be down because I'm not going to be, think about it. We've traded pretty big over the years. Why would I want to take the opposite side, let alone the really big guys? Why would they want to take the opposite side of an order when they don't really know what's behind them and they don't know what's coming next, right? Oh, yeah, let me make a market here. Of course, things widen up on an FOMC day because you want to make a market that you want to take big size going into a number because the reality is if you're going to take big size, you better be careful that the person who's doing it doesn't know something that you don't.
That goes back to Mickey Oppen, who we both love, always taught us that don't take a trade unless you know where you're going to get out.
That's it.
So I've only made 2 trades in my career where I didn't have an exit, and that was one of them. Another one was I bought a 100 lot on the open and ended up getting smashed on them and tried scalping out of them in the S&P, like spreading them off in the spoos, which was a terrible idea. But know your outs, know where you're going to get out before you take the trade. And if you don't have an exit, don't take the trade.
Yeah.
I had no exit. Also what people don't understand is we didn't have access to charts in the pit. I traded 10,000 for my own counts. I traded 10,000 NASDAQ a day, and we didn't have charts, and we didn't have up-to-date news. So we had to wait for what the hell is going on? We had to wait for somebody to say, from a desk, what was going on, So it was different. It was very different. And that was an adjustment for me anyway, when we were on the screens, was having access to all that data and, up-to-date, relatively up-to-date news. Was, it was like, it was an overload,
Yeah, I mean, it was funny. I remember when I used to walk up to my perch and all these guys would be like, look at this dummy going up there, Pontarelli. He'd be like, dummy.
Yeah.
And he would joke with me.
I never understood why you would do that.
People are like, why would you go up there and trade? I was trading in a little Globex machine. I swear to you, my screen was not this big.
Right.
And we'd be sitting there plus minus and whatever. And that's how we learned how to trade Fed days. And when you get to today, I think so much of it is carried over because those days, what they taught me from watching the action, being able to see it with humans, is that inability for a person to really step out and make a market. And I think that in today's market, that's the most important thing to understand. Is because whether you're on the screen or your pit, that has not changed. Tanya, when I go to you, I mean, for when it comes to today, something Pac says the same thing you said earlier. Earlier, you said I don't trade the first 30 minutes. You let the price, action take its course. After that, walk us through just the mindset. Are you working stops? I'm sure you are, but like, how are you like entering? Like, kind of like, what's the, I'm going to buy here or sell here. Are you widening your stop? What are you doing?
Well, yeah, typically on FOMC days, like you're probably going to need wider stops. So I will decrease my sizing too. Basically, I'm waiting for that manipulation to happen, and then a break in structure in the other way if I'm doing a reversal, and then I'm waiting. It's always the same for my strategy. And then I'm waiting for a retracement to at least 50% of the leg, and I enter and I put my stop where that manipulation, the bottom of that swing, basically. If I want higher, the top of the swing. If I'm going lower, and just let it play out. And honestly, like sometimes it happens. The price action is going to be really quick. Sometimes I do go down to like the 30-second chart then, or even 15-second I've only really done once recently on NFP. But I'm anticipating really fast action. And then I'm also putting it in my mind like, oh, we might not get my retracement. I might not get the level that I want. And then I'll just watch it go. It's fine. Like there's always like another day. Like tomorrow, we could take back all of the gains if we go up. Like I've seen that. Like the next day just completely reverse. So that's basically it. It's just training my mind. Like there's no FOMO if I miss it, and there's always another bus. Basically, like as long as as you follow your plan, it's never a bad day. Like you can lose money, but if you followed your plan, it's never a bad day.
Wise.
If I follow my plan, it's never a bad day.
Yeah. Right. Always.
You should tweet that. I mean, for sure.
I might.
Hit tweet.
Yeah. Don't let Pac
Oh no, plagiarism.
Go big, go smaller, not at all.
You have to quote me.
Hold on a minute.
Got it right here. No, that's an incredibly important line. That's an incredibly important concept, and the fact that there'll always be another bus. You know, so FOMO. Oh my Lord. Especially on a day like this. When the price action is moving and it's good, and and a trade passes you by, who cares?
Yeah.
FOMO will kill us. But JOMO we can build on,
Joy.
the joy
Oh,
missing
yeah.
out.
I think I've seen you tweet a few times. You said that you'd rather miss a trade than lose money.
Every day, any day.
Yeah.
I'd rather miss a move than to lose money.
Yeah.
And sometimes that's like that gives me the feeling like most people get when they lose money. That gives me the feeling like gold. I tweeted about that yesterday. I bought gold last Monday or Tuesday at 29.16. I took some profit on a quarter of my unit at like 29.27, and then scratched them out. I went and had lunch. I came back and I was flat. And we were trading at like 29.50.
Yeah.
And now we're 120 higher from there.
Yeah, we're like 3,000 plus now.
Yeah.
Right? Yeah.
So, when I looked this morning, we're at 3,047.
Yeah.
So flat. I got nothing going. That was $140 I left on the table because I left my stop in for scratch. But you know what? There'll always be another bus.
Yeah.
There'll always be another trade. There'll always be another $150 move in my future. But if I try to chase that, if I get aggravated about that, and I start buying, trading in the middle and trying to reestablish that position, I'm going to get in trouble. Just like you were saying, that I can't tell you how impressive that is. That at this stage of your career, and as young as you are, that you've got that locked into your spirit, because that's important, and that will keep you here, and that'll keep you profitable, and those huge days are coming. There'll always be another one.
Yeah, I really like your stories about that a lot of traders that have made millions and then lost them all. Like I always keep that in mind, the longevity, right? Like I'm like, there's a long career. Of course, I'm going to miss a trade here and there. And there's going to be plenty more trades I'm going to miss, or like plenty more times I get stopped out, break even, and then it goes in my direction afterwards. That's just part of the game. Yeah.
Go for a walk. Go get that sun on your face. Go pray
literally,
a rosary.
I've been working on that. The cool down. Do you have a cool down session after your trading?
Yeah, every day.
Yeah.
At the end of every day, when the market closes, I have a little couch that I'm sentimentally attached to everything in my office. My desk is falling apart, but I won't change it.
Okay.
The couch in my office is horrible, but my mother, before my mom died, she would that was her nap couch, so I kept that.
Okay.
At the end of the day, I lay down on that couch. And I close my eyes and I get into like a twilight, a little bit of a twilight.
Okay.
And then later on, then I'll, like after dinner when I come down to my office to kind of prepare my levels for the next day, then I journal everything.
Okay.
And I go over all my trades. It's something else that Mickey taught us.
Yeah, that's my New Year's resolution, is that lock down on that cool down session, because sometimes I'll feel heated after a session.
Yeah.
Just have a lot of energy. I'm maybe mentally depleted, but I have a lot of physical adrenaline.
Me too.
So that's my New Year's resolution, lock that down. I've been going for walks afterwards. You said that that same day, that Fed day in December was one of my best days, but totally different. Yeah, we melted down 1,000 points on the NASDAQ. Afterwards, I felt so much energy. I felt like I could run 3 miles.
Yeah.
So, I was completely just buzzing the rest of the day. So, that's my biggest thing
That's
I'm working
a great
on.
feeling,
It's just
isn't it?
kind of,
Yeah.
It's like a high. So one of the things that I miss about being on the floor was the drive home. I lived an hour away. The drive home was my time to decompress.
Okay.
And I would get my personality back, and whatever happened on the floor stayed on the floor. At home, it took me 2 years to learn how to be at work at home.
Yeah.
It's tough.
It is.
It is.
We're almost out of time, guys, because we're getting near the FOMC. I just want to do one quick thing. First of all, I think that the three of us should talk about a cool down, because you and I, what's happened in our life, that's the most important thing.
Yeah.
Honestly,
Right.
for me, I could go on about this. Today's not the day, but we're going to do that, and I'd love to have Tanya talk with us about that, because she gets that.
Sounds good.
4.25% to 4.5% is what expected. 1% chance of a cut, so which I'm surprised it's that high.
Right.
June, September, the next 2 potential cuts they're thinking. We're not macro people. We know that. Literally 15 to 20 seconds each before we wrap. Expectations for today, any key price points you need to watch to where you think the market gets above or below, they're of interest.
So 57 even for me is one of those macro levels that I talk about, the flattened zone in the S&P. So above this, the next flattened zone will be 58.40. But I think that 55.09, we talked about 55.10 3 weeks ago when we did that Spaces with Tracy, with Shy Girl, when we came underneath 59.49, and that held. So I think that's a great low for now. Going into expiration on Friday, the way that I can talk about this for an hour, I'll tweet about it later. But I think that they want to settle. They want to settle the March contract as close to 57.80, the 200-day, or to 58, someplace in the 58 handle. So if they do nothing today, depending on what Powell says at the presser, I think we rally. So I'd be looking at those levels. I'd be looking at 57.80 to 58 even in the next couple of days. Who knows what he says? We can break.
Well, you'll be here tomorrow with us,
Yeah.
and so will Tanya.
Yeah.
So last word, Tanya, before we go.
I think my levels are pretty similar to yours, except I think it was like 56.90s, 95s. If we close over that, then maybe I'd probably look for higher. Mostly I'm looking at the 4-hour chart. If we close above my swing highs, then looking for higher. If we wick and we go lower, I'm reversing and going lower, and that's basically it. It's pretty simple.
Yeah.
Yeah, so we'll have to see.
So downside, 56, 57, 57.30, down to the lows of 55.10. But that's, I absolutely agree with Tanya.
This was
I
great.
think 56.40s today could definitely happen on the downside,
This was great. I love the three of us, but the two of you together, I could see you guys doing something in the future on NinjaTrader Live. It's absolutely fantastic. I'm going to take it to Jim Cagnina. He will take it from here, and Shy Girl, our senior economist, will be joining him in just a moment.
Good luck, everybody.
Jimmy, to you.
All right. Good afternoon, everybody. We're getting ready. We're a couple of minutes away. I don't know what kind of surprises, if any, we are going to have today, but let's go ahead and bring in Shy. Shy, are you ready? Let me show you some charts too in the meantime. And while Shy's getting here, I just want to kind of show you some of the price action on the E-mini S&P. So if we can get that screen up right now, that'd be awesome. All right, so it's kind of an interesting. There was a lot of expectation. Opening range and initial balance. We had kind of a normal range. Wasn't too exciting, but it was something, right? So buyers came in, a little bit of retracement, and then buyers again up to R1, and then we stuck. So R1 held, right? We didn't get to that JX4 level. We didn't get to that 1-day max level, and the biggest gamma level right here, right now, is at 5,700, and we're just kind of it's magical. We're trading at it right now. The one thing that's happened though that's different is the point of control was pretty good earlier this morning, around about 56.84, and it's bumped up higher. So there's an expectation here of a move higher based on whatever happens at FOMC. Tracy, how are you?
Hey, Jim, how you doing?
Pretty good. I'm surprisingly excited about this.
You're excited for no rate. What do you think's going to happen? Well, we know they're probably not going to get a rate cut, right? But what do you think Powell's going to do?
Exactly. So that's why I'm excited, because he's going to be asked about tariffs. He's going to be asked about core PCs getting close to 3.0. He's going to be asked some questions that he'll either dance around, which he's really good at, or maybe say something that's disturbing.
Well, we're about to find out. I definitely agree with you. He's going to get a ton of questions on tariffs, and he's going to say he doesn't know, and that they're kind of in the sit and wait mode, right? Which is what he's been saying for the last 2 months. So don't really expect anything new out of him on that front. But I always like the presser to see if he gets a surprise question.
Yeah, for sure. So, this I think will be the third meeting in a row where they were unchanged. They didn't do anything.
Right, correct. So we really don't have we have the highest probability is of a rate cut that the market's factoring in, and what the dot plot looks like is for that June meeting and September meeting. Of course, that can all change. As soon as this comes out, we'll have to see, how that is. But that's what the market is factoring in right now.
Yeah, and we're going to get another dot plot today, right? It's every other meeting. Correct. Interestingly enough, the median dot plot, as I recall, from December for 2025 for the Fed funds rate was 2.2. I'm gonna have to double check that. You'll know better than me, but I thought it was an interesting issue. And again, that's median. It's not the total range because the
Right.
total range was pretty big.
Yes, it was very. It was very big. So, but we'll see. We're about to find out.
I know. Here we
And
go.
and here we go. No change.
Do you have the
No
Bloomberg
change.
terminal powered up?
Yep, no change. So,
Here we go.
no change. And
Let's
let's
see if we
see
got the
what
dot plot out yet.
the
Yeah, I mean the S&P is still pretty close to that JAX 1 level of 5,700. We're trading above it right now, 5,708, 5,707, but we're not seeing much momentum right now.
not much movement. It was expected. I think the fireworks kind of start at the presser or till the market, it kind of sinks in as far as the market is concerned. So if we look at the statement changes, they took out the committee judges that the risk to achieving the employment and inflation goals are roughly in balance. They changed it to our uncertainty around. So less confident than they were before. What else changed it? So, and they added in the beginning in April, the committee will slow the pace of the decline of its security holding by reducing the monthly redemption cap on Treasury securities from $25 billion to $5 billion. The committee will maintain the monthly redemption cap on agency debt and agency mortgage-backed securities at $35 billion. And we talked about this morning. This is what you were looking for.
Yeah. So, could you read me that one more time?
Sure. So beginning in April, the committee will slow the pace of decline of its securities holding by reducing the monthly redemption cap on Treasury securities from $25 billion to $5 billion, and will maintain the monthly redemption cap on agency debt and agency mortgage-backed securities.
Yeah, the Fed's balance sheet, they refer to it as the Fed balance sheet, the assets on their books, is still, they've made some progress, but it's still 2.6 trillion above when COVID hit, pre-COVID. That's a pretty big number.
Yeah, it's a huge number. So, but they threw everything they could at February or March of 2020, right? So,
yeah,
that is where we stand.
I'm seeing the
it was not a unanimous. It was not a unanimous decision, as we talked about this morning. Christopher Waller opposed. So.
Yeah. Okay. That's close though. It was close.
Yeah.
So on the dot plot itself, core PCE, the median core PCE by the folks that vote or provide a dot, is actually, it went up to 2.8 for calendar year 2025 from 2.5 on the last dot plot in December. So they raised their projection for core PCI for the year, calendar year, up 0.3%.
That's not surprising. I'm guessing they're taking the tariff threats into account.
Yeah. We're going to hear about it, I am sure, at 2:30.
So definitely, I'm very much looking forward to this presser, for certain.
Yeah. So the equities are still trading right around. I just had to mention the equities are still trading around 5,700. We're just kind of stuck there.
Market, not a big move in Treasuries, not a big move in S&P. So I think this one's a hurry up and wait.
Yeah. I would say a nothing burger so far.
nothing burger so far. So up next we have Tony Nash. I'm going to have a little chat with him and see what he thinks about this.
Hi, Tracy.
Tony, how are you?
Yes.
So good to
I'm
see
good. How are you? Thank you. It's good to be seen.
Good. It's been a while.
Yeah.
Yes. So what? All right. So the Fed held rates. That no big shocker there. I don't know if you had a chance to read the statement, but they. What are your first thoughts about this decision? Do you think it was more data driven, or are they just kind of trying to maintain some flexibility?
Yeah, I think things are okay. Inflation is in a comfortable area, making progress. Yeah, there really wasn't an expectation to move because first of all, it's not pressing. Second of all, there are so many other moving parts right now that I think it would have been probably imprudent of them to make a decision right now, given tariffs on the horizon, given some of these other geopolitical issues around Russia, Ukraine, and the potential impact on global oil price that could come from that, other things. I think it's just a good moment for them to wait and see. I was very happy to see that they'll continue to pull back on the Fed's balance sheet. They're slowing it down, but the balance sheet now is back to where it was in May of 2020. So there was a huge expansion of the balance sheet between March and May, but they're back to May of 2020, which is good. It was at $9 trillion, and now it's less than that. But it's good to see that they're going to continue to push, chip away at that. And so we start to get normalization of Fed behaviors. We start to see not fiscal spending necessarily pushing Fed behavior. We start to see domestic economy, international risk, other things being those indicators that the Fed is following. And that's normalization, which is a good thing for all of us.
And what do you think this means kind of for U.S. Treasuries right now? We've kind of seen the 2 and 10 start to narrow. People are worried that's kind of recessionary. What are your thoughts about that? Do we continue to see that, or is it a concern of the Fed?
I think it should be a concern of the Fed. I mean, we're in that place where bonds have to rally so that stocks have to become less attractive so bonds can rally. I know that's not a real popular thing to say, but we need the 30-year to fall faster so that there's a broad-based wealth effect in the economy. Equities, trading hits a relatively narrow swath of the economy. House prices hit a broader swath of the economy. So Scott Bessent is trying to really reduce that 30-year yield so that people who hold mortgages can trade up in houses or something like that. I mean, so many people are trapped in a 3% mortgage. He's trying to give homeowners some flexibility. So, we've seen the 30-year rise slightly on this. We've seen the dollar. Where's the dollar? The DX right now is up slightly, but it's at 103. So, it's come down dramatically. Oil is up slightly. I think people are really waiting until the presser because we normally hear there's some mess up in the presser that Powell makes that the other Fed governors have to come back in over the next week and correct. So you'll know what he's really feeling by some mistake that he makes, and then what the other governors come back in to say in the wake of it.
Absolutely. Do you think, how are you feeling about what the Fed is going to signal as far as rate cuts for the rest of the year? I mean, you think this is going to be kind of hawkish or dovish? The market seems to think, or is pricing in 2, but, the market has generally been wrong for the last couple of years. So,
yeah.
What are your thoughts?
Yeah, I think he's going to be hawkish with a dovish option. I know that sounds a little bit, crazy, but he doesn't want to show dovish cards yet. But central bankers want to cut rates. That's their de facto position. And so, the consensus right now is saying June is the first cut. I wouldn't be surprised to see one in May because of the progress that's being made on inflation. So if you look at, everyone's go-to for the past few months has been egg prices, right? They were $10 plus, a few months ago, and now they're, I don't know, $6 or something. So, just in how inflation feels, I think that's changing a bit over the past few months. And I think as inflation feels like it's less impactful, and as we see equities, say maybe plateau, as yields need to fall, I think it could be a signal for the Fed to start cutting maybe a month earlier than consensus. So we could potentially see a cut in May instead of June. So I think we'll see 3 to 4 this year. I think consensus is 2 to 3. I think we'll see 3 to 4.
Wow, 3 to 4. How do, we're hearing this narrative, inflation is coming down, which it is slowly. Yet they're talking about how inflationary tariffs are going to be. So how do, particularly traders trading this market kind of reconcile that?
Yep. Yeah, this is, anybody who's heard me talk about this will be tired of this and they can mute me for the next 2 minutes. But so there was a study done by the U.S. Commerce Department in May of 2023, released in May of 23, talking about the impact of tariffs under the first Trump administration in 2017, 18, 19. And what they showed pretty consistently was that the impact of tariffs was temporary, meaning the tariffs had an impact of between, say, 6 weeks and 4 months. In that, after that initial time passed, the prices came back to, say, a world price of goods. So there is an adjustment period, and I believe that the administration is right in as much as when tariffs are levied, at least at this point in history, the exporting country finds a subsidy for those tariffs. And the biggest exporting countries that we're looking at in terms of our tariffs are China, Canada, and the EU. And so anything that we levy a tariff on between, say, 6 weeks and 4 months, those economies will find a way to subsidize those exports. So the prices of those goods for American consumers will revert to a mean. So it's not all necessarily going to hit at once because all supply chains don't happen at the same time. But there will be a temporary impact. The administration has been transparent about the fact that there will be a temporary impact. But once you hit that 6 week to 3 month period, depending on the product, those prices will normalize to, say, a global price of those goods. And U.S. Customs and the Commerce Department benchmark global price using import price data, meaning what's the price they have at U.S. Customs and what's the price in, say, the UN Comtrade database, which is effectively a global price.
Excellent. That is very good information for us. So I wanted to talk a little bit about, let's talk about a little bit about the labor market, because that has a dual mandate, as Powell
Sure.
loves to say over and over and over again,
Yes.
which is inflation, right? Price
Only two
stability,
mandates?
and well, that they're allowed to say that they
Right.
that they govern, right?
Yeah.
I'm sure they have a lot more, but they can't state that exactly. But what? Let's talk about the labor market. So there is also kind of this, analysts are kind of talking about, again, this, 2 and 10 year signaling a recession, and they're comparing it to like 2008, 2020, saying that, we're going to get huge unemployment, about the, huge unemployment because it's going to move 100 basis points, and this is going to cause a massive, recession and problem. Do you think
Sure.
that's kind of a little bit overreacting? Because it seems like the labor markets, well, if you believe the BLS, first
Yeah.
of all, but
Yeah.
the labor market to the Fed seems okay. So what are your thoughts on the labor market?
Yeah, I think, when we hear about the labor market this year, we have to keep in mind where that commentarian is. Are they in DC? Well, given the given the layoffs that we're seeing with the federal government, we're going to see a lot of layoffs in DC. So anybody who's sitting in DC who's talking about unemployment, they're going to see with their eyes that a lot of their friends have been laid off from the federal government. So there's going to be a negative bias there, meaning they're going to amp up their unemployment expectations because they're seeing houses for sale, they're seeing their friends unemployed, they're seeing people looking for jobs, and so on and so forth in DC, Northern Virginia, Maryland, and so on, right? So BLS economists are in that area, and they're probably making a point in their narrative that unemployment is going to be bad so that the US government doesn't lay more people off. Because government spending is not a small part of the GDP calculation, right? So when we look at other places like Texas or other, relatively large population locations in the US, unemployment in these places is okay. And so when you look at the Fed year-end unemployment forecast, it was at 4.3%. Now it's at 4.4%. So they're expecting a slight rise in the unemployment rate, but not dramatic. The year-end core PCE, they're saying it'll be 2.8%. I'm sorry, instead of 2.5%. So I think there's a little bit of 1980s era tariff economics in that. And they haven't really factored in substitution and subsidy effects into that. So I think their PCE forecast is a little bit high. And the Fed cuts here on GDP. Okay, so GDP, they're saying GDP will fall from 2.1 to 1.7% growth this year. I think that's a little aggressive. I think we'll see growth somewhere in between there. I mean, GDP, look, it's a made up number, but I think it's probably somewhere in between 2.1 and 1.7.
So, what should, because a lot of our audience is obviously traders. So, if you're looking at this data, how does a trader sort of digest this information that, came out today? I mean, it's kind of in line with the expectations. The market's not really moving. It doesn't seem to be that excited, but, kind of from a trading standpoint, how would you look at this market right now?
Yeah, I would segment it into probably 3 different horizons. Between now and April 2nd, when the new tariff stuff comes in, you'll see some last minute deals done between Trump and individual trade partners. And some of those could surprise to the upside. So if there's a deal done between, say, the US and Canada or US and Germany or something like that between now and April 2nd, that could be really good for markets, could be really good for commodity prices in some cases, right? So I would pay attention to news flow, particularly between now and April 2nd. And then in the wake of April 2nd, I think there's a contingent of people around there who think that Trump is bluffing. And so they won't do anything until after April 2nd. And then you'll see a downside bias for certain trade partners and certain industries, but there could be some very good agreements that come out post April 2nd on an individual country basis. I would guess China wouldn't agree anything until after April 2nd. And then you have, say, the medium term after April 2nd. So you're talking from, say, June onward. And so, I've said since November that China is going to try to play hardball with the US for 3 to 6 months. And that's for domestic reasons. I mean, China is a very nationalist country. The US is accused of being nationalistic, but it's not even a fraction of nationalistic that China is. So China has to play to their home audience. They can't be seen to be buckling to the US. So they're going to play hardball for 3 to 6 months. When a China agreement is arrived at, I think it will be probably better than some had hoped for. And I think that could be very helpful for markets, both China markets and US markets.
Excellent. And if we are looking at US Treasuries, is there any concern that you have there? I know a lot of U.S. Treasury traders are obviously looking at this market.
Yeah, I mean, there was a good auction. I think it was yesterday. So I think because of the unsettled nature of equity markets right now, I think you're seeing more of an appetite for treasuries compared to say 2 months ago. So I think this volatility in equities really helps treasuries. It really just depends on the day, actually. But I think we're likely to see good news in the treasury market because of where Basant is trying to go on yields. He's trying to push those yields down. They're trying to cut spending. They're trying to do other things to bring yields down and fund with longer term debt.
And for those that don't understand how the Treasury can affect longer term yields, can you kind of explain that? What kind of their options are?
Yeah, I think, well, okay, let's go back to the last, say, year to 18 months of the Biden administration. Yellen had to fund the government. And so she adjusted the duration of the treasuries that they put out on the market from longer term to short term so that they could get money at a lower cost. Because what did she care? She would be out of office by the time those notes were due, right? And so Basant comes into office, or Besant. Is it Besant or Basant? I can't figure out.
I think it's Besant.
Okay, Besant comes into
I think it's
office. I'm
Besant.
sorry. Besant comes into office and he has all these short duration treasuries that he has to bring much longer for the US to be able to afford to operate longer, right? And so that's a conundrum that he has to deal with. So he has to change that duration while lowering yields, which is kind of an impossible situation. But we've seen yields fall over the past, say, 45 days or something. So, he's doing things to make those more attractive. And I think part of that is with the Fed and other organizations selling off some of their equities, it's making the equity markets less stable, raising the VIX and making it less attractive. So that's making bonds more attractive in terms of price, but not in terms of yield, actually. So we also have to keep in mind with bonds, I mean, just like equities with bonds, it's a relative game, right? And so what is Europe doing with their bonds? What is China doing with their bonds? And so are those attractive bonds to hold? Well, it's really questionable. And so, the US, whether people want to admit it or not, it's still a very attractive bond to hold. And when there is volatility in equity markets, it's a great place to put money for a period of time.
So the whole planet's not selling bonds, as some people like us selling U.S. Treasuries, as some people like to say.
Yeah,
We still have
that's
forward buyers.
Yeah, like Asian countries selling their USTs. I mean, is China selling their USTs? Maybe they are, and buying gold. Yeah, maybe. There is some evidence to indicate that, but China holds their USTs in a number of different entities, some in the Caymans, some in Belgium, some elsewhere. So it's really hard to tell what's actually happening on a net basis with China. So, one can argue that that they are selling, but again, there's a web of entities that they use to hold USTs because they don't want the world to know how much they do hold.
They do that with commodities as well. So
Exactly.
that seems to be their MO, right?
Right.
They don't
Yeah, it
really
looks
like
like equities are
the
trading
world to
up
know.
on this. Yeah, it looks like equities are trading up on the on the release, Tracy, which is good, right? I mean, let's see what Powell can do to kind of screw that up, but it really looks like equities are liking what they're seeing in this.
Yeah, I mean, we're up a little bit. I mean, don't you think that, and Powell knows this, because there's kind of a risk of holding rates too high for too long. I mean,
Yep.
It's not that they're too high now, but, comparatively speaking to the zero bound that they've been for the last, So I think, I think Powell probably knows that and
Sure.
would
Yeah, one of the other things
wanna
I'd like
be,
to one of the things I'd like to cover, Tracy, I'm sorry, is the dollar. And so
Yeah.
we have to look at where the dollar is. Again, the dollar was at 109 probably 6 weeks ago. It's now trading at 103 on the DX. Keep in mind that when Trump left office in 2021, the DX was at 90. So it was more than 10% lower than where it is right now. And for trade, for this administration to push the dollar lower, which I believe they will, it makes US equities less desirable as a place to hold wealth because the dollar isn't strong. It makes US debt more desirable as a safe haven, and it makes the US terms of trade better because it makes it harder for Americans to afford imports. So we really need to watch where the dollar is going to understand kind of what could happen in equity markets. And the dollar is down dramatically since Trump came into office. The euro is up pretty well since Trump came into office. And so the terms of trade for Europe are declining. The terms of trade for the are improving. Terms of trade for the US are declining. And so we really have to pay attention to the dollar and the impacts on the dollar from these Fed and Treasury movements.
Do you think this administration wants a stronger dollar or a weaker dollar?
No, I think they want a weaker dollar. Trump showed in his first administration that he's comfortable with a weaker dollar. So every president says they want a strong dollar. So it doesn't matter what words he uses. Every president will say they want a strong dollar. But strength is relative. If we have, let's say, a DX at 115 or something, we blow up economies like China and other emerging markets and Europe and other things because their companies have debt in US dollars, right? So if their companies, if the dollar it trades at a lower valuation, then their companies can take on more US dollar debt, and that helps yields for US companies. So, it's a lower value dollar, depending on the political aims that the administration has. I would say at this point, there's a bias toward at least a 5% decline in dollar value over the next, say, 3 to 6 months.
Interesting. Well, traders, currency traders out there that are trading currencies would be interested in that. Absolutely. And any final words before we head into, before we say goodbye and we head into this presser and we have another trader up?
Yeah, Tracy, my bias against Powell. He's going to say something. I don't know what that nugget is, but he's going to say something that he regrets. And people are going to have to come in over the next week to fix it. So just pay attention to what that nugget is, because that tells you what he's really thinking.
Absolutely. Absolutely. And looks like we have just another minute here. So what are you keeping an eye on in the markets specifically, over the next couple of weeks or so?
Tracy, I'm always keeping my eye on oil price. And I know this administration is keeping their eye on oil price and gas prices because their view is that that's the origin of inflation. And these Russia-Ukraine peace talks are related to oil price, I believe. OPEC plus discussions are related to oil price. Policy with Venezuela is related to oil price. Policy with Mexico is related to oil price. So, I'm keeping my eye on the dollar, on oil price, and on S&P levels primarily. Those are the three things that I'm watching. Of course, there's always gold, but I think that gold is on its own journey right now. But those three are really the things that I'm focusing on at the moment.
On its own journey. It looks like, I keep wanting to say, is it gone too far too fast? But there's literally, I can't find a reason to actually short the market, that market. So
yeah, I mean, if you look on a currency basis, I don't see a reason for gold to have a major pullback. It may level off, but unless something changes dramatically, we have interest rates rise, we have the dollar rally, and a few other things. I don't see a major reason for gold to fall. That could change at any times as conditions change, but I don't really see a major reason for an adjustment in gold price. Downward adjustment.
Absolutely. Exactly. I'm just waiting for silver to break out and catch up. I love the silver market.
That's right. Exactly. A little more industrial. It takes a while, as you say, to catch up, for sure.
All right. All right, Tony. Well, thank you so much for your time today. Hope to have you back again.
Anytime.
And thank you, Vin.
Thank you. Thanks.
Thanks.
All right, all right. That was awesome, man. I love that guy. That's the first time I heard him. I'm glad I listened. All right, before we get our all-stars in here, because we do have some all-stars coming up again in a second, and I'll introduce them in a second. I just want to take a really quick peek, if I could get my screen up here, and talk about this FOMC performance report that Edgeful does. So right now we've been kind of we're just a slightly over that Jack's one level, that 5,700. I understand that the rubber's going to meet the road now. Powell's going to read his. They're going to wheel Powell out. He's going to read his statement, and then the question and answers will start flying. Should make for some good price action. But right now, so what I did was I opened up the Edgeful report, and the report's called FOMC performance. And what I did was I took a look back from the week before September 18th meeting, where the Fed started cutting rates, till now, just to get a kind of a historical probability point of view on what's happening with the E-mini S&P. And so what I'm doing is I'm tracking 2 days before the FOMC, and then the day of the FOMC, and then 2 days after the FOMC. So you can see that, typically there's a build-up right before the FOMC. Then the FOMC lets everybody down by 0.53%, and then it picks back up to by that in the 2 days after that, Thursday and Friday. So that's kind of an interesting stat in the back of my head as I'm thinking about tomorrow. We don't know what's going to happen today, but as I'm thinking about tomorrow. The other one I wanted to show really quickly here is the 10-year Treasury notes, and this was even more interesting to me. But maybe not. I don't know. We cut 50 beeps in September 18th, 25 November 17th, and now we have 3 pauses in a row. So keep that in mind when you look at the Treasury data. But right now, again, FOMC slightly a buzzkill. 2 days before FOMC, a big buzzkill, and then 2 days after. Again, a move to the downside. So this is kind of an interesting report you could pull up on any market with Edgeful. I highly recommend it. It's super cool. So we'll see what happens here. We'll see if we keep rallying up to the 1-day max and then beyond on Chair Powell's presser. Having said all that, I think we're ready to go. I think we're ready to get the OrderFlow lab guys in here. We have both Nick and Leo. Hey, guys.
How's it going, Jim?
We're back.
I love it, man. I love it. You guys are going to tell me, man. I see bullishness in the E-mini S&P, but anything is going to happen in the next few minutes.
Yeah, we're ready. Powell's gonna do his thing, and we're gonna see if we can't find some good quality trades to get structured off.
Sounds good, man. All right. Well, I'm going to let you guys do your thing. I'll be sitting back watching. Go ahead and take over get your charts going, and can't wait.
Awesome. Thank you. How's it going, Nick?
Leo, what do we make of this?
Well, I've got an anchored view up from the FOMC announcement from 1 o'clock Central. We seem to be holding that for right now. We've rebid, this area here, and kind of holding above prior day high. So I think looks right now like some bullish activity. However, we are near this upper part of this balance area that we tried last time we were on stream. We were attempting to break out of it. We fell back in, and so we're attempting, basically at resistance on a higher time frame. So we'll see what happens there, of course.
Yeah, we are finally on the NASDAQ at the very least, peaking above once again last week's value area high. And I know this is that same range. I think Monday afternoon I was kind of joking as we were coming into the close. I'm like, watch them sell this back down into the top of balance. And then, we haven't really moved. And so I don't know. It's I wouldn't say coin flip, because clearly there is a more bullish reaction out of the actual FOMC release. And now who knows what Powell's saying in his press conference. Did we get a tie check? Is he going purple tie? I didn't quite get the picture yet. I was trying to pull it up real quick.
Somebody in the chat, give us a tie check.
I need to know. One of these days he's going to come out with just a a candle green tie and make everybody very, very happy. But until that day comes, he may just be rocking the purple tie.
Purple tie.
So we're all okay. Everything
Does that
is
mean
fine.
something?
If you go on X, it probably does. If you're in the wrong corners or the algo has screwed up a little bit for you, and you get into some interesting takes. But for the most part, it doesn't matter. I think it'd be very curious to see outside of his planned statement that he usually makes, where he likes to say his dual mandate jargon. I'm curious to see what questions they ask. I'll probably watch it back later, but for the most part, Leo, I know you and I talked about this on Monday. Like, do you trade FOMC much? Like, I know we all kind of, I think, dabble, maybe throw on some micros for some fun here and there, maybe in a sim account, just to enjoy the crazy volatility that sometimes this day can bring. But for the most part, this is a pretty muted reaction to any FOMC, especially when we look at something like December's release, where Powell's a little more hawkish and even said we almost didn't cut back in December on the, I think it was 18th. And the violence that kind of ensued shortly thereafter. So,
I mean,
I don't
we
know,
really
do
didn't
you
even
have an art to this?
Honestly, I don't really trade actively. Yeah, I may trade a couple of micros. I'm on the micros contract today. I'm not looking to get wild here, but if there's some good opportunities, we'll snag them. But yeah, I mean, muted for sure. We barely made a new high on the day on this last push.
Oh, we did. Yeah. I didn't even notice that.
It doesn't seem like we have tons of, excitement like you would see on a normal FOMC, which is kind of strange because I feel like this is one of, we always say this, but this one seems a little more, I don't know, like a anticipated event. So I was thinking, we might get some better price action than what we're seeing right now.
Yeah, it's pretty much just a neutral reaction to what I think everyone expected, which was them just to hold rates. So no shock, no surprise. Maybe I'm not an expert in this, but maybe just a little bit of some panic hedges come off and we get a little bullish move. And now you get the algos kind of keying into that momentum a little bit. And we are up near today's highs. It could just be something as simple as that, where you got that little pop and that may be all we get. We may just be stuck in this range forever in the lows of the last 2 weeks purgatory. I don't know.
Well, earlier in the day, we had my setup that I tweeted about, the 5-minute mid.
Yep.
Took us to new highs on the session, came back, tested it again. I think a lot of people, if they read that thread over the weekend, were probably in some of these trades. And this little peak, this one didn't even break the OR low here. That was the FOMC. So there were some good opportunities there, even for a couple of reloads on the way. These pullbacks are great opportunities to get even more long.
Was the 5-minute mid, was that did you take that trade today?
I didn't take this one today. I took this one here earlier.
Okay.
Yep.
That rebid that came in.
Yep.
Yeah, I took the initial short. I was dealing with my newborn this morning, so I actually missed all of the initial balance and kind of came in shortly there after around that 9:30 candle and just kind of got in short and was just sitting there. And I was just getting nervous the whole time. When you're short near the high of the day at any point in this market or any of the last year, I always feel like even with any good read or order flow signal or anything that kind of gets me into the trade, I'm always nervous sitting in that short near kind of the top of the initial balance that we're just going to break through. And it took forever. I think I was sitting in that for about 20 minutes before I finally got to my take profit. And I was going for like 6-7 points. So it was nothing major on ES, and just almost shook me out of just kind of a scratch, because it just felt like we might finally break out again to go retest that range breakout again that we did kind of on Monday, but still sitting right around there even after the release.
May have missed this opportunity here for this prior day high.
Yeah, sitting right at previous day high was also coincides with the initial balance and pretty much the top of that old range from last week.
Right.
So if you were just taking any trade, this is probably a decent setup if you're just going for kind of more continuation to the upside out of the release. But who knows? This is where during the presser, like they kind of just those statistics, or I guess some of those plays, they can go to die so quick with just the way the tape can move if he says something specific or this one whatever question is asked, just how the market takes the reaction. So I don't know. But yeah, there definitely is a potential long here for the continuation back up. Maybe towards what was that high? Yeah, 960s.
Yeah. If we get another push here, I might try to take it. It's kind of a questionable. I don't know. I want to see it hang out here for just a minute.
Yeah, it's pretty much sitting around the exact same spot too. Initial balance high and previous day high.
All right, we'll put 2 lots on. On this bracket I set up just for this session, I'm using a much wider stop. So, I think when volatility is high, you want to be generous with your stops and just use smaller size. So we'll see what we get out of this. I think we can actually use a pretty tight stop on this. Pull that in. Because really the trade idea here is that we continue to march higher. And so if we pull back in to below the IB high or below, basically the prior day high, this anchored VWAP, there's so much here.
And there she goes.
And there she goes.
That's a quick 30 points there.
Yep. I'm going to take one off. Oh, overcovered. I hate it when that happens.
Oh, did you hit flatten?
I overcovered, clicked the button twice.
Oh no.
That's sometimes, when you're
those itchy fingers with the hotkeys.
Yeah. That's one drawback of hotkeys. I'll give it to you. That's one drawback of hotkeys.
I have no choice outside of or after tomorrow, man. I have to put in the work and set it up, and otherwise I got to take a break, which who wants to do that when this is kind of what you love to do every day?
Well, I'll always jump on Zoom with you and show you how to give you the lesson on hotkeys.
I just need, I think, buy, sell, and flatten. It's about as simple as
that's all I have. Actually, so on my mouse, I have programmed 2 mouse keys that are the same keyboard shortcuts that I use. So I can click buy and sell with the mouse buttons. And then the flatten key I actually have as a keyboard shortcut. So like Alt F, for example, is flatten for me. But I don't even have to use the keyboard for getting in or out of trades. Which is useful because I scale into position or and scale out of. So it's not it's not that hard. You can be very quick.
See if we're gonna make another new high here.
It almost looked like a good short up there, but we'll see. There's a tough balance between not having dead air time and focusing on what's happening, right?
Always.
Yeah.
Oh, is it just you gotta just press a button, I guess.
Right. There we go. So we're gonna get
financial juice, see if anything relevant has come out from Powell.
We're seeing some exhaustion here. I can't. No. Okay. Whoops. I got delayed orders got filled there. That was a mistake.
Short.
Yep. And it's going to take me out. I didn't intend on going 4 lots. Just going to cover 2. The idea behind this trade is, we popped and made a new high. And from what we look at from an order flow perspective, there was a little bit of exhaustion into that. And so often we'll see a move back down, back into this range. So just kind of a quick scalp to see if that's the case, but this trade setup doesn't look like it's going to work.
Yeah, when we were talking about that long from 900s, that initial balance high, previous day high area, my initial thought was, do we head back up towards 20,000 evens? But wow, we did that quick.
Yeah, and we have some areas of liquidity up there from a few days ago where there was was that the other day when we were on stream?
Yeah, I think we were teetering around like the 20,060s, and you think you were targeting basically this area that we just at least are kind of absorbing or reoffering from. That 980s, I think, is the spot you were talking
That's
about.
right. Yep, that's right. I remember that. Nothing like trading the same prices as we were on Monday.
It feels like we've been doing it now for 2 weeks.
Right.
Yeah, granted, we get some new price numbers because we've rolled, but it's the same dang area. So I'm very curious if, now that FOMC is kind of behind us, obviously the pressure's still going on. And Powell is still talking. Looks like he's making some comments on inflation and things, but do we finally break out of this range, or are we just stuck here? I mean, what do we have? Tomorrow, I think it's like initial jobless claims, like nothing crazy that maybe will move us really out of this. You just kind of need to see buyers finally, I guess, taking a stand now that FOMC is behind us. But so far, doesn't seem like a lot of enthusiasm to go retrace this sell yet.
Just need ES to get on the same page here.
Yeah, still trading around 57.25s, 27s, excuse me.
There we go. Tricky spot.
Mm-hmm.
They're pulling some bids in NQ, and then just right as soon as they pull, they reload them.
This is almost like a sad FOMC, man.
Sad trombone. We need a sad trombone meme.
I mean, I got one. Just don't know if it's going to go through. There we go.
Oh, there we
The team
go.
behind the scenes has it. I didn't even have to push a button on my my soundboard over here. They came prepared. Love it. The chat's asking, is this a 300 volume chart, Leo?
It is a 300 volume. We are super zoomed in. I am curious though, because I'm going to scale out of this because it's continuing to push. So I'm not going to fight this thing. If we get some downside, what I'll do is basically look for reoffers on the downside to pull back, basically to get short, more size. But here, I'm not really going to try to stay in this trade for, stay in this trade for too long. This is just kind of see if it works kind of idea, not a primary setup. But shit, what was I going to say? Oh, I am curious on the stream. Yesterday I think over the course of the week, there's been some comments about you can't see the screens or difficulty on that front. So I made some adjustments on this one today. So I'm just curious if those adjustments have helped. So let us know.
Yeah, it definitely looks a little brighter.
Am I trading exactly as I normally would? No, not really. We're just kind of, taking probably some extra trades that I normally would. But this is a setup that I would look for on any given day is when we break a high like this and we get this exhaustive type of look to, potentially go for a counter trade scalp. I just don't want to get, too excited about it because it's FOMC and I don't want to get run over. I mean, we have some nice absorption up here though. So, I mean, we have exhaustion, we have some absorption up here, or tons of selling. These candles represent selling pressure, over time in the candles. So, I mean, there's plenty of reasons to for this trade to be a valid trade idea.
I'm kind of shocked that they haven't pushed this up higher.
Right.
It makes me feel like, as soon as is he done talking, do we just fall back into today's range?
Right.
Call it 150 plus points lower on the NASDAQ at the very least. Just kind of want to see them push this back towards 20,000.
Nick wants me to get stopped out.
Yeah. That's what
That
trading
volume
friends for.
Fatfish said about the volume profile. So this is just the volume profile from the RTH, from the start of RTH. And the delta profile is a leg to leg. So here at this little diamond is where the delta profile starts. And basically what this does is it tracks, the auction as each leg builds. So every time we have a counter rotation in the market, it will reset this delta profile to the new anchor point in the market. So basically, like right now, if we get a counter rotation from these 980s down to the 910s, 900s, maybe, we'll see this leg to leg reset from this high. And so that's a way to, it's kind of, for me, it's a way to keep track of the tape, at price as we auction, up and down, throughout the day. And so you kind of can zero in on those absorption plays that are kind of key for me from an order flow perspective. Because, what happened here in the past, I can see just by looking at the left, because the candles represent some of this as well. And so it's kind of like combining, it would maybe counter some of this buy delta, but we wouldn't be able to see how aggressive that was. All right, I got stopped there, Nick.
I was almost thinking about just
call for
pressing the buy
20.
button at 960s just to see if it would make a push to stop you out.
Mm-hmm. Thank you.
I didn't, so it's not my fault.
Side fades. Yeah, this is for Ninja. So this is all, and these, the nice thing about this is this volume profile is built by us as well as this one. So they're custom and they work with either lifetime or non-lifetime versions of Ninja.
Another exhaustion printing at that high at near 20,000.
Should we try it again?
Yeah, this is kind of
feels
pushing.
like I don't want to fade this move.
No, because now it's actually finally breaking over.
Right.
Did Pal say something? Strong goods inflation in the recent 2 months, if persistent, must be to do with tariffs. That was not a good sentence. So a little bit of the algo scraping news kind of cutting off probably part of that statement.
I'm going to take this short here. We popped this, had that exhaustion, had a bunch of offer delta here. So there's some passive offers in the market at that 20,000. And just want to see if we can't join some type of rotation down. If this doesn't move, if this doesn't get going, I'll probably get off of the short side. That's nice. Got the delta flip here. So this means we've transitioned from a delta perspective over time from tons of buying to now selling. And so we want to see that continue in order for this thing to continue lower. Obviously, we want to see selling come in now that we saw that all that buying come into the market at that psychological level, the 0-0, big round number traders.
They're gonna limit down this right now without filling me at 92s.
We're going to 0.
Going to 0. They really just didn't fill me. Let's see if it comes back.
Did you try to get short?
Yeah, I
There.
was trying to short just
Order
a micro.
filled.
There we go. Stopping a new high.
Yeah, I can pull my stop up or down. I mean, really, if you look at what's happened since the print, we've gone, basically we're stair stepping up. So these counter trades are very, very small in size, just testing this idea that, if we do get a down rotation here with this order flow that we're seeing, there's a good opportunity for some type of, a little bit of a reversal, but we're still pushing higher.
Stop
And
filled.
out.
So my play now will be to mostly focus on continuation trades. As we seem to be pushing higher, that's probably the moment that we'll hit, reverse on the day.
Mhm.
But so 940s would be a rebid spot for me. So kind of the idea behind that would be, if we look at this low compared to this high, a retracement of this leg, if you will, would be in these 940s, and there's a little LVN there, as well as this anchored VWAP from that print is pretty close to that spot. So that's the first area that I look for potential continuation long trade. What are we doing on the, what's it look like on the 30? There's a nice LVN here at 67
Stay in the 60s.
to 80 to 90s.
And we got what the March VWAP is up towards the 140s. We really got going.
I think my monthly VWAP might be incorrect. I think I rolled this 30-minute chart
Oh,
wrong.
yeah. I guess that's going to screw that up a little bit.
So we'll wait for a better trade. I'm not trying to pick a top or a bottom. There are specific setups that we use from an order flow perspective that, it's not picking tops. It's just saying that, there's a set of circumstances or conditions that we look for where we have exhaustion, we can't had selling come in, and so we want to potentially participate with that selling. That it didn't work. And I'm definitely not young.
Interesting. Leo, there's a question in the chat asking when trade of 8.
Trade of 8, never.
And any chance we get on trade of 8? I'm assuming he's talking about the chart book.
No, there's I mean, I know that Trade of 8's continuing to innovate. There's technical challenges to get some of our stuff on there. As soon as they give us the go ahead, though, we'll be ready. Young, he says, I'm going to be 41 on Sunday. I don't feel young. But they say 40 is the new 20.
Is it? Do you feel 20?
No.
Yeah. Yeah, we've just kind of been stair stepping up slowly but surely since the release now.
Yep.
That
I'm not a guy
900
to
longs.
take breakouts. That just doesn't fit my wheelhouse. If AJ was here, he'd be buying these highs.
Yeah, I'm pretty bad at buying highs.
Who's great in the chat for momentum trading? Anybody buying these highs, like to buy new highs like this?
It's definitely a skill set that I'm trying to get more comfortable with. I feel like I do it and it works, but then I'm still like kind of scalpy taking my points before it does. Then it eventually may roll back over. It's that fear of, I guess it's that it's eventually my initial thought of trying to short that high. Actually, we just continue to go. So I still am kind of just take my points when it's worked, but I know a few traders that are very, very good at it. It just never has been like, I guess, the confidence trade that I feel like taking.
Yeah. AJ's in the chat. He said you rang, which means he's probably long like 20,000.
Yep.
The big zero number. Crudele said 40 is the new 20. All right. I'm with you, Crudele.
I'm not quite there yet, but I'm not that far behind either.
What are you 37?
35.
Okay. You got some time.
Yeah, I got a little bit.
Well, we're just going to hang out for a proper trade setup. You know, Crudele said, hey, you guys want to trade the close? I'm like, sure. And then he was like, okay, we're launching on March 17th. I'm like, cool, we'll do planning and get ready. And then I realized that it was roll week, it was FOMC, et cetera. So it's like, yeah, we're going to trade the most challenging hour of the session and also one of the most challenging weeks of every quarter.
Yep.
So
I didn't even check volume today, how much it's actually moved now to the M contract.
I haven't looked either, to be honest.
Should probably do that. I have the CME's thing bookmarked somewhere. I just got to find it.
Something that Crudele and Pax and Tanya both brought up, or all three of them brought up, were, today's reaction isn't necessarily the reaction. Totally 100% agree with that. And I would just say, if you're trading tomorrow, a lot of the roll will be done. We'll hopefully get some great price action. But, I would just say, don't just assume that because the current move here in the market is to the upside, that's going to be continued tomorrow. Very, very well maybe. I'm not trying to make a call, but I think it's important to stay eyes wide open on the days preceding or after FOMC.
Right. Especially because we came up to 20,000 like 150s and failed and sold right back into the range. So
yep,
very possible we could continue to balance until more clarification on Trump's tariff plan and everything else going on. There's still that kind of fear in this market. It seems you still haven't gotten that V move out of this correction that makes you feel confident kind of, and I'm sure there are people that have been nibbling in a lot of single stocks, and I've been trying to buy this dip, but you really haven't gotten that like hold my beer move back up that you feel like you missed the bottom in theory. And then you feel like, oh no, maybe I'll wait for it to pull back, and it never does. So
right.
I'm still kind of waiting for that day, I guess, Leo. Maybe it's like a 2% up day or something that just kind of really makes you feel confident that at least this is a near-term low.
Everybody wants to look at their portfolios and not cry.
I didn't look at my 401k last week. Did you?
No. I've gotten phone calls from friends and family
concerned,
asking me what to do. I'm like, look, I trade the next,
30 seconds.
I trade the next 3 to 5 minutes. I have no idea what this thing's going to do in the next week or two.
That's how I feel. Actually, because I grew up with my dad's birthday in March, where it always is that kind of weird period of weakness in the market, at least for the last couple decades. It seems like there's always a correction in March, and he always just, calls me around his birthday. Like, are you watching this? Or have you seen, like, they always love to sell it down on my birthday. just to kind of put me in a bad mood. And I've always just kind of laughed it off, but it really does hold true with the seasonality weakness that we kind of get at this time of the year.
Right.
So far, pushing back up.
Yes, it's about to test last week's high, 57.57. Crudele, what was your number? 57.90? I can't remember from the stream this morning. Some sellers here in ES. 57.54.
Oh yeah. What was that?
1,700 lots.
Yeah, looks like about a negative 1,400 delta right there.
We are at an area that I do have marked for it's kind of a key area. Although I don't trade FOMC on a regular basis, so I'm not sure how this area works or doesn't work on FOMC day. So I am going to watch these 76s to 108s. What I think I would look for, just because I'm not going to try to pick up pennies in front of a freight train, but if we do get a break, maybe a reoffer, if we reject from this area specifically.
Mm-hmm.
But we're getting selling now that's walking up. So selling when price is going up is not.
Here, someone big just came in again.
Oh yeah.
Yeah, the pennies in
This
front of a
that
steamroller thing is how this is kind of feeling.
yeah. This is that area of liquidity that we had from last week.
Yep.
Or from Monday. Sorry.
If only you were still long from 900.
Right? That long I took, it would have been nice because I just could have kept riding that thing. Next time I'll use the keyboard keys. Every time somebody tries to sell this market, you'll see there's if I can zoom in, they're really hitting this. They hit these 100s really heavy on the tape. You could see it come through. It got nowhere, right? You don't want to see that if you're trying to sell this thing.
Mm-mm. Yeah, somebody came in. It's like I got 54s on ES, 56s, and just got absolutely walloped.
Still going at it.
Well, maybe we spoke the breakout into existence.
I guess so. Well, we had that trade from the prior day high. That was a great trade. Chat, what do you do when you overcover? You just get back in your trade or you just sit out? I'm curious.
Personally, I'm stubborn and will sit out and then hate watch it the rest of the way up.
Yeah. I think the worst thing you can do is try to count. Like I took those two shorts. Was it two shorts?
Mm-hmm.
With, kind of defined rules. I think the worst thing you can do is just like try to counter trade it just because you messed up, like that's
Start martingaling this whole way up.
Yeah.
I mean, that would be this would have just been a painful counter trend trade. If you were continuing to try to even like scale into it, thinking it's eventually going to turn, you're just asking for punishment.
Yeah.
1 micro, 10 points, little paper cut, no big deal. I don't know if my anchored VWAP from, I guess, March 1st is absolutely correct with the rollover, but we came right into that. Now sellers trying again.
Now they're hitting the tape pretty hard now.
Mm-hmm.
It's 120s. This is the AJ long setup.
Where I try to short this again, and then it just blasts through another 30, 40 points.
Yeah, so like when you get these trend moves, right, you'll see this tons of negative delta come in on a little pullback. And these are usually the best entry spots because like from a price action perspective, trend days, they don't really have like great rotations to get into a move. Now we're really pushing.
They broke through that exhaustion. What, did Pal stop talking? Is that why we get a counter trend rotation?
We'll see what we do if we get a retest of these 110s. But on those trend days, price tends to just kind of walk up, and you'll get these spots where on the profile from a delta standpoint, price will just stall out where this and build up tons of delta. Those are great continuation type of moves in either direction, right? Like if we're stair stepping up, obviously you're looking for bids, to get stuffed on a pullback, or if we're walking down, offers to get stuffed on pullbacks to the upside. Because trend days just don't give you great entries, and so that's a strategy you can use for trend days to get on those.
How are you on trend days? I struggle with them if I'm not into an early trade. Like as they continue to develop, let's say we get like that second set of single prints, that's where I may just call it a day because I know it's just not my game. I'm not good at continuing to buy the high and hoping. And like you said, the pullbacks can be so shallow, especially on trend days up. I feel like when they're to the downside, you get a lot more reflexive bounces that you can then re-offer on, or even counter trend trying to buy the dip on it. I think you're paid more in those situations for those opportunities versus when we go up, it's just sometimes those pullbacks don't really happen. And then I'm too afraid because we only pulled back, let's say 20 points, 30 points on the NASDAQ to then get long with the trend. Just like it was with buying breakouts. It's the same concept. I'm just something that I struggle with and trying to get more effective at.
Yeah. The whole reason I did all that work about the single prints is because that's kind of my tool to keep me out of bad trades.
Mm-hmm.
Whereas AJ basically, that was a kind of not a research project, but just kind of a project that we did together. And, I use that to kind of force myself to avoid, fading trend days, which I think a lot of traders don't struggle with necessarily. They just find themselves not realizing that it's a major trend until it's kind of too late.
Right.
And then they deal with some of the psychological stuff of trying to get back losses or whatever that might be. So the whole reason that we did that is because I wanted to keep myself out of those spots for myself. AJ took it to another level. He's like, yeah, so basically I'm just now a trend trader. That's what he turned himself into after we went through that process. Because we were both more or less not mean reverting, but trading the edges, kind of traditional intraday trade styles.
Right.
I think that's more popular than people that trade momentum, I guess.
Yeah. Yeah, it's definitely one of those situations where I know I've grown as a trader because I will sit out most of those days as I've kind of noticed it developing, just knowing it's not my game. I'm not great at it.
Right.
And I'm not going to try to, I guess, take that bias like, oh, we're in a trend day, so now I'm just going to buy it. It's just I'd rather sit out, wait for my type of trading, my type of rotations that I can get into, just because the tape fits more, my style or what I'm comfortable doing. So I'm much better now of just being like, nope, not my type of tape. I'll come back tomorrow.
Right.
That's the other thing too, though. When we do that, there's so many other, futures assets that we can be trading that I also want to continue to develop eyeballs on other things too. So if it's, if we're chopped in a tight range on something like NQ or ES, like, well, what's crude doing? What's gold doing? Is there another market that I can, use the same type of strategies that I focus on with equities? Can I use it with commodities or other things? And that's something else of one of my goals for this year is to try to
Trade
have
other
eyes
markets.
other places that I can trade when, the markets are slow or when we're in the dog days of summer and ES is in a 20-point range or something. Like, what else could I be looking at?
Right. So there's a little bit of absorption right here into this pullback. I talked about this like being kind of one idea if we did get a sharp move lower to short a pullback. I got a kind of a bad entry, but anchored. I've got this anchored VWAP from the high, just moved it. So being able to, from a leg to leg standpoint, using the anchored VWAPs in addition to delta profiles is incredibly is powerful for an intraday trader.
So you took that short.
In normal conditions, I probably would have added, I probably would have added all the way up to the 110s.
A little messy. Wonder what we're gonna do.
ES is pulling back quite a bit.
Uh-huh.
So I'm hoping ES can pull and Q with it. ES back at prior week high. I'm
Leo,
going to
your
go ahead and
favorite
take.
big round number is coming up here.
Uh-oh.
5700s
Uh-oh.
on SPX.
Uh-oh.
Those dang option buyers.
I'm going to take one off here just because, it was already a low. We have tons of neg delta in this area. So I would expect we get some support in this spot, and it's a good spot. 20 points is not a bad little counter trend. I'll let this play out.
Oh, there is 1,000 lot on the ES book that just came in at 71s.
I see that.
Was that there when we were kind of trading up there?
I'm not sure.
I was.
There's two of them actually. There's two sets of those 1,000 lot orders.
Oh,
There's one at 79.
interesting. I was not watching
So
the
nice
ES
trade.
bomb as we were kind of coming up to that high.
Right.
I don't know if they just came on the tape and we kind of just ran from them a little bit.
I think we can hold this into the close. There's a stat that I mentioned last time when we make a new high in L period, which we did. That M period also makes a new high, and that's like 67% of the time. But I'm just going to hold this trade and see if it doesn't, if the 67% doesn't show up today.
What was you said? It's a 67% chance.
67% of the time when we make a new high between the 3 and 3:30 period Eastern, we will make a new high in the last half hour.
Did you just say Eastern time?
I did. I'm
I
trying
don't
to
even know who
convert.
you are anymore.
I'm trying to convert.
I don't know if I could do it. I always speak in Central time, man. I just can't wrap my head around anything else anymore.
Everybody makes fun of me because I say that Eastern time doesn't matter, but
I mean, I'm going off. I don't know. I guess we say the New York Open and it's at 8:30 Central Time, but maybe, I mean, some people probably will say that's a hot take. It's the RTH Open.
well, where are the CME servers in Chicago?
That's a good question.
That's Central
Probably.
time. Yeah, I mean that's Central time. Where's the pits?
No, Pitts. Yeah. Yeah. I guess we got to just go with we should all be speaking in terms of Central Time nowadays. Yeah, so we ran all the way up towards Monday's highs and just are now going to fall back into today's range, aren't we?
Yeah, we didn't even take out Monday's highs.
Yeah.
I hate when somebody that uses Ninja needs to tell me how to fix that from happening or stop that from happening. When I switch to that other chart, I get lost on my execution chart.
Well, there was a setup this morning because we talked about sometimes like I'll just hate watch something. I didn't trade initial balance. I wasn't even paying attention at my desk during the New York Open, but we they front ran on NQ the whatever previous day or basically settlement, and you kind of would be waiting in theory for that to be taken out, and then we rotate back up and they front ran it by like a couple ticks, and it's the same thing. Like I might have been waiting for that to get long, and I know that was a very sharp reversal out of that kind of early morning low around 706.
Right.
So yeah, that would have been a trade. I just got frustrated and just sat there watching as it continued the reversal higher.
We tested prior day close. It's almost to the tick, actually.
Yeah, but I probably would have waited for that like wick out of it, like take it out, make a
right here
low below it.
Yep, that's what Nick's talking about right here. Prior to yesterday's close.
So I saw that and I was like, oh, thank goodness that I was not even in front of my computer in the first hour because I would have just sat there and did nothing. Know yourself.
Yeah, very true. Very true. $200-point runner. Maybe we can get 100 points. If we go 100 points, I'm going to take it. It feels like we have a little bit of momentum.
Leave it for the auto liquidator.
We've got some offers coming in, chasing this thing down, so that's going to help me.
Back down to your favorite number.
Here's that spot. So this could be a potential support area. There we go. We're going to take this 100 points. Oh, I didn't even get it. It said 100 on the thing, and I didn't even get it.
Watch it reverse like 30 points now.
I know it's going to. It's definitely going to.
Yeah, I can see it pulling back towards 38s, 39s.
Right. This little spot right here.
Mm-hmm. So when you just hit the reverse button, bro.
Right. That always ends up
done that.
That always ends up well for me. Sarcasm.
Yeah. All right. So yes, came into, I guess, that first exhaustion spot, Leo, right around 57.40s. And then once again, that resistance kind of held, or that support.
Yeah.
Here we go.
The worst part is sitting and, like you have a great trade going and like we're short right now, right? And there's a spot where you think is a great, has good support, maybe a great long, and you have to watch it, like if you're going to try to hold for your target, watching that counter rotation.
The panic sets in.
Yeah. Like, what do I should cover? Sometimes I do, sometimes I just bail out of the trade and it ends up going, where I wanted it to. But yeah, I think it's good to sit in that uncomfortability, right? It's a good practice to sit there and be uncomfortable.
Well, it's also, yeah, it made sense where we would bounce off that support. But did you see anything in theory? I know we had some positive delta that kind of came in there, but now we're basically right back to that spot. Was there anything that almost invalidated the continuation of this trade for you as we were kind of
No.
pulling back up? Exactly.
Yep. There we go. I'm going to take that cover. So for me, 100-point trade, that's A plus. Happy with that result. Again, just kind of review. Obviously, we're not trying to catch tops or bottoms here, but we talked about if we get a strong counter rotation off of those highs, look for a pullback to get short right against this little volume node here, where that selling came in. We can see on the Delta profile. And then we actually have a pullback zone, which is something that is an OFL tool. And then with this anchored view up here kind of helped, as long as we're below this anchored view up from that high, I want to stay in the execution part of that trade. If we were to have pushed above, the 120s, I would have gotten out of that trade because again, don't want to fight a big trend, but with those predefined conditions and setup, that's a pretty good trade opportunity for a move like this with good risk to reward, right? Because if it does end up reversing the session, then you have a great opportunity for that 100-point runner, which we saw play out.
Where did you cover the first one? I might have missed it.
I think it was like around 70.
Okay.
Or maybe a little lower. I usually take around 20 to 30 points. So it's just kind of habit for me. And then, like for this, I only had 2 on, right? So take one off at 20 or 30. And then just because we had some great momentum, just to try to ride that momentum, and just let it play out. But if I had more on, I would have taken, some at 40, some at, 60, and then, try to hold that final runner. But since we only had one, we didn't really have a choice but to just kind of let that momentum carry us lower and just hold the trade.
It looks like they may run this over again.
Yep.
And we're going to go right back to that initial entry, Leo, aren't we?
Yeah, we are.
Right back to 900, the initial long that we were talking about when we came on air.
Gonna buy this IB high again? I
don't know if I'd buy it now. Maybe that's some softness in me there, but I don't love that both times we've come on here, we've had a very wild kind of bullish move up and then a liquidation right back down.
Yeah, it's been tricky. I mean, we had kind of the same setup last time we were on.
Right. Not a lot of wild volatility as we may be used to on an FOMC, but for a trader, I mean, you got 2 very large rotations that you could have potentially executed on if you're patient at the very least. Not quite the whipsaw that I think we've seen in FOMC pasts.
We have about 30 minutes left. Nick and I are both not afternoon power hour traders, so I think this is going to be a great test of our will and ability to trade some of these afternoon sessions. Nick, do you have anything that you're going to be looking for the last half hour?
For the most part, do we get another decent move? Do we fall back into the initial balance? In which case, do we just remain range bound? So for me, I would love to see that this is potentially bought again near the top of the balance range. I think that we were talking about on the longer time frame. Right when we came on, I would rather see that held for the time being, since we basically have just had like 2 inside days, I guess almost 3 now if we don't continue this breakout for this week. So I want to leave this range since we've been in it for a good 8 trading days, basically. I would love to see potentially some new prices or some new activity. And so I guess my thought is, I mean, I don't know if I would want to buy the initial balance high if we got back down there, but I would love to see potentially this hold and maybe get a decent rebid. 960s, see if this 980s level again from Monday holds.
I would kind of be interested to see what happens up here at the 30s and 40s if we pull back to this anchored VWAP. I've got a sell zone there. So kind of an area of structure that I look for. So like when you're looking for continuation type trades, that aren't when a market's kind of moving, a pullback up to the spot could be a great area for sellers to re-enter or continue, basically push this market lower. And with anchored VWAP being there, I would want to see what the profile, what happens, on the tape when we get up there. So the leg to leg just reset from this low. So now we're seeing basically the deltas that are coming in from this low now to this high. So that would be a trade that I'd be interested in taking a look at.
So far, so good.
So they came down to those 940s, value area high, kind of where the breakout started from. Supported that, came in with support. Pretty mechanical there. What?
Are we going to close at 5,700?
Oh my gosh.
I'm just going to say, Leo.
Do you want to tell? Hey, do you want to tell the story about the gamma test?
I'm going to tell the story.
Tell the story about the gamma test. Chat, you have to listen to this story.
So I got a little cocky after an OPEX Friday where I nailed a close with a call of like exactly where we're going to close. And I think we had like a good 40, 50 point move during power hour that got us right to that level. And I was kind of like tongue in cheek joking that we were going to do it, but it made sense when you were looking at some of the options data and some of the gamma data. And so I got real cocky right after this happened and said, I don't know. Then something happened where I think Leo was on a bit of a rant around options data and just things that we've kind of, I think, talked about a little bit on Monday. And I basically said, well, yeah, I think, maybe a third of the time I might be able to have a rough idea of where we probably will close using options data. And I think I said something stupid, like 25% of the time I could probably do it, depending on the time of the day that I made the call. And so Leo then decided, let's see if this is actually true. Let's see if there's any validity to what you're talking about. So we made a little friendly side bet that over the course of about 20 trading days, could I do it? And I was real hot day one. We were real close, came within about 10 points. And then the wheels came off and I was nowhere close shortly thereafter. And by day 6, I quit. I was like, I'm not doing it. Because originally I was realizing when I had made such outlandish calls based on the options data, it was basically power hour, which there's a lot of other things I think you can look at and have a rough idea of a rough area of where we may close is. But Leo also said I had to have the prediction in basically by lunch, which just added another whole amount of variables that I was not thinking about, of that much time and more volume that can come in. And so it completely blew up in my face.
Well, I mean, if you're going to have something that can predict, it has to have, there's got to be some time. Like you have to have an opportunity to participate in that prediction.
Yep. And it was a decent exercise that the information that we see, the volume that you can get from a lot of zero DTEs, as you get closer to the close, I think it has more. It matters more, or it's easier to kind of see in the grand scheme of things based on what price action has done as we kind of get closer to the closing bell. But as you widen that, you're basically just throwing things at a dartboard and hoping for the best, which is kind of what it became when I was making predictions at like 10 a.m. around the euro close and hoping for the best. It just gets real difficult. So we had fun. It was very friendly. I was wrong, but I can tell you right now, day one, Leo was sweating.
I wasn't sweating at all.
He was sweating.
You think I was sweating, but I wasn't.
Because it looked real good until about MOC.
Somebody asked how a leg is defined for leg to leg. Okay, so like the market moves and rotations. There are many ways to look at, what a rotation is. But what we do is we aggregate over time what the average rotation is in a market, any given market. So for NQ, we'll look at, and we actually post these in OFL every morning. So right now, the average rotation in NQ is 120 points. So what I do with the leg to leg is I'll put that in half, right? So I'll use anywhere from 50 to 60 point for the rotation tool, because if I pull this up on this piece here, we can see that the rotation size I have put in here is 50. And so basically every time we have a 50-point counter rotation in the market, it'll reset this leg to leg profile. So right now it's anchored from this 08 right here where this little marker is. If we get a counter move to the downside, or actually it is a down leg already. So we would need a counter rotation to the upside right now for that to reset. But basically what that does is it allows you to see what's happening from an order flow perspective, like the right now, right? So I don't necessarily care about what happened all over here in the past. I want to see, from a delta standpoint, what's happening right now. I could see what happened in the past. There's other ways to view that. And so this gives you that view. Am I related to Aaron Renfrew? No, but Aaron is a great guy, and he and I chat, pretty regularly. We'll share ideas and talk amongst friends, talk shop. We are getting a little bit of exhaustion here at these at this big round number. They tried to sell it, couldn't make a new low. Now we're really pushing. Maybe we'll see what we do if we get up to these 30s.
Mm-hmm. 33.
No, I'm not related to Trader Kane. Oh, Kane's asking.
Leo, that 1,000 lot is back on ES at 49s.
Oh, I see it. Let's see if it gets taken out.
And there's another one. The other one's still sitting at 79s.
He needs to take off his hat. Nope.
I didn't rock the hat today.
I can't show up on stream, on Deli's stream with hat hair. I've got to have it done.
Does Ninja have hair and makeup people for you?
Deli, can you send some hair and makeup people here, please? Seeing more absorption right here.
Yeah, gosh.
If we stall out for a minute, I might take a stab at this. There's only 10 minutes left.
20 minutes. 20 minutes.
I'm not going to sit through the 50 algo.
You sat through
Which study to
FOMC, man.
select? Well, which study to select for it's a custom study from OFL. It's just called the volume profile, and the delta is a feature within that. So what's cool is I could actually turn this into, like if I don't want to change any settings because I'll mess something up, but you could actually do, and a lot of people do this, is they'll have a delta profile along with a volume profile side by side. So you can see what volume is doing and you can see what deltas are doing within that leg. That
Leo,
was
do you
going to
find any
send a hair
relevance
crew.
doing the full sessions delta?
What's that?
Do you ever use basically like a recreation of the volume profile with delta for the entire session? Because I have that on one of my charts. I'm just curious to see if you still do that.
I used to. I don't anymore.
Yeah.
I'm gonna take
Maybe
a
into your
stab at
40
this
spot.
short. Yeah.
And that
I
1,000 lot
missed
got
spread
filled,
the
it looked
best.
like.
I think the thing I hate about taking this short is that this low right here didn't make a new low.
Mm-hmm.
Just from a price action standpoint, I don't really love that. It definitely seems like we're walking this up to close it on the highs.
Yeah, ES held the 5-minute 21 EMA, which I like to use on my other chart.
There's a there's a small order there at 50.
Another 1,200 came in. 53s.
Somebody's happy to get filled on the offer in ES. It sounds like.
Mm-hmm.
Selling's coming in. I'm going to pull my stop down to 42. Keep it tight.
Eight minutes to MOC. Looks like Powell's done. Yes. Yeah, it was about 20 minutes ago. That ended at 19. Yeah, this leg down, I guess, it already started, but then right as Powell's press there ended, we got that secondary move after the reoffer around, what's that, 110s?
Right. I wish I had a better entry on this trade, to be honest.
Where'd you get in?
28s.
Oh, yeah.
I kind of hesitated when we pushed up into that 40 spot.
Still holding.
But very, very muted FOMC.
Very much. Not what we're used to. But I guess when it's that
there.
telegraphed that they're probably going to pause, and it's like, how much are we going to move?
Right.
I was on streaming during the December meltdown. That was actually really, really funny.
The December FOMC?
Yeah.
Yeah.
It was just chaos. They pulled that 1,000 lot at 53s. And I'm talking ES 53. I know NQ is trading like the same spot.
Yep.
3 digits for NQ, 2 digits for ES. Otherwise, you get yelled at in Discord.
Hey, Crudele, we need to get Pax on here to trade the close with us one day. The closing bell.
That'd be fun. Oh, they might have walked it up. Now it's at this guy. This guy's just playing games, Leo. Now the 1,000 lots at 57.
Oh, he's sitting at prior week high now.
Yep.
Yeah.
Wonder if our friend on NQ for the last month, throwing 800 lots, 1,000 lot, is now just moving to ES because he's scared.
Probably somebody watching the stream.
It's probably just the Fed watching your levels.
Yep.
Leo, something in the chat. As a member, where do you see these the tools training?
So in Discord, there's a dedicated EDU section for each platform. So we have NinjaTrader, we have two other platforms. And so for NinjaTrader, you would just click the NinjaTrader channel. Basically it's kind of a library. And then inside of that, there are channels that are specific for the EDU parts of, the tools require some setup, obviously. And so there's a channel for every tool that helps walk through it, as well as documentation.
And I will say this, it is definitely worth the time investment to do it, because not only are they explaining the tools, but the concepts behind some of the indicators and the stuff in the chart books, which is just so much valuable information on how to kind of understand what's going on in the auction day to day. Just to kind of understand the piping behind some of these tools it made me a much better trader, just the way Leo and his team explain this stuff.
Well, and I think that's one thing that we try to do differently in the space, is that it's one thing to have something that's really great. It's another thing to take a concept, automate the concept, and then kind of educate, why is that important? Why are these zones showing up on my chart? What are they telling me? That's where that understanding of how to actually use the thing is what's key. That's the key component that I think, traders miss from time to time, is just looking for, like, you see, there are some things that print like stars and other tools that we have that print like a dot or an arrow. Like, those are flashy and cool. The value is understanding what's happening behind the scenes and why those things are printing. And we try to do a good job of explaining the more or less theory behind it. And then we also have office hours twice a week that we run, where you can come and ask questions. And then we also do deep dive webinars for those, similar things as well. So, I mean, we try to make sure that not only are you equipped with great tools that help you break down the market, but also that you are able to develop the understanding of why you're seeing some of these things print.
It's good stuff.
Nick, how long ago did you start with OFL?
Well, I got exposure to it probably like early 2022, just with, other trading buddies, things that I've seen running around the, on social media, thought it was interesting, and then kind of dove in towards the end of 2022, which, to be honest, like, I was still kind of in the very new stages. Like, I think everybody gets, when you start trading futures, you can get hot early very quickly. I think it's just a little bit of luck in the game of, like, you may think you know what you're doing, and then you kind of hear traders that have been doing this significantly longer than I have articulate the tape a little bit differently, or explaining some of these concepts. You're like, I really don't understand what I'm doing when I'm pressing these buttons. So
Right.
it allowed me to like be like, I kind of know what I'm doing, to now I actually understand what's happening on the tape, and not necessarily can execute based on it, but have an understanding of when and why it makes sense to enter in certain spots, and how I can actually define like my own type of strategy using certain tools or certain ideas. And it's something as simple as like, I really wasn't paying that much attention to something like MGI, which is probably free and available on just about any single platform or system that you could use. But then to kind of understand like, okay, a previous or a value area low versus a value area high, like what is that actually saying, and how can I potentially use something like that to incorporate my trading versus just having like horizontal levels on a chart? Like what does that actually mean in the auction? So I became a big volume profile trader, and then doing it in
Right.
conjunction with other things. But it's been a few years, and I'm still learning, and I still ask Leo way too many questions when new things are released or new ideas that he and his and the brain trust have kind of come up with behind the scenes of just ways to improve upon some of these studies. It's like just a way that if you kind of understand what you're doing, to level up in another way, really.
Right. I think our screen got pretty fuzzy there. I got a warning that my internet connection
Oh,
is bad.
uh-oh. I'm back with you guys.
Hey, Jim.
Hey, Jim.
And what a kind of disappointing FOMC day. It's like, yeah, we had some movement, but everything's settling.
It's very muted. Yeah, I mean, there was a lot less excitement than, the last couple. It surprised me because I thought there would be more. I was expecting better, better activity today.
Yeah, if I would be
Yeah.
looking at this 5-minute chart and I didn't know it was FOMC, I would have absolutely no idea. I would just think this is a regular bullish move towards the close that you kind of can get during some of these end of day moves. It does not have that wide range, that spasm candle kind of right as the release comes out, that just it looks like a 7:30 release. Like we didn't get any of that.
Right.
Yeah, I mean, I'm looking at my quote board, and we had silver move down 1.12%, platinum move down 1.25%, but everything else is in the realm of, well, I don't know. I guess equities being up over 1% is good.
I mean, we're still out of this range so far. And then the 900s is an area that we've, broken out of. This is the second time to break out of it. So it'll be interesting to see, do we open up above this tomorrow and then try to continue to rally, or do we break down? And I think if we break down, back through this balance range, we may go to the other side of it and maybe look for new lows.
Yeah.
So I think it'll be interesting to see, what actually does happen tomorrow.
Yeah, no, for sure. We got 2 more days for the end of the week. And, the other thing is we've got all sorts of surprise news coming out of Capitol Hill every other minute.
Yeah.
So you never know. But I guess April 2nd is the big day, right?
What's April 2nd?
That's supposedly like, all right, we're going to unveil the final answer on this tariff thing.
Oh, right.
It's like, all right, well, then why are you talking between now and then?
Yeah. Just do it, right? Do it. Get it over with.
Yeah. So I don't know if there's a legislative reason or what. Shai would know this for sure, but I don't know.
Right.
So, so what do you guys got planned for tomorrow and Friday? Anything special?
I
I'm
don't.
having shoulder surgery in the morning, so I got a fun
Oh,
rest of the week.
Are you really?
we know
Yeah,
what Nick's doing.
I'm getting my shoulder repaired. Got to do a labrum rotator cuff or arthroscopic repair.
Ooh.
So tomorrow we'll have Stowe back on, and not XY, Elias will be on with Stowe. Two of my favorite
Okay.
guys.
Yeah. No, we saw XYZ, aka Jonathan, yesterday. I like that guy. That cat's cool.
He showed up in the ninja robe.
He
I was
did. He
waiting for him to
did.
whip out
Full
his
Versace.
katana.
Yeah, that's what the chat was like. Nice Versace. Anyway, and it's Stove, right? He was pretty cool.
Stowe. Yeah, yeah, yeah.
Yeah, Stove. Yeah, yeah, it's awesome.
They've
All
never
right, so
streamed anything before. So I mean, it was a great, for them, good experience to do that. And I think, Stowe mentioned being super nervous, and I think he did a great job yesterday.
oh, I would have guessed that they're like professional streamers. That's crazy. That's crazy how good they were.
No, that was their first time.
Wow. Yeah. Wow. Wow. Well, we're lucky to have him, man. That's for sure. So, all right. So I think we could probably wrap it up, huh? Or do you want to hang out to the bell?
No, I'm good. We're good to wrap it up whenever you are.
All right. So thanks again. I won't see you guys till next week then, right?
That Monday. Yep.
Yeah. All right. Well, listen, if have a great weekend, chill out and have some fun.
Yeah, you too.
Yeah, I will. All right, guys. Thanks again. Appreciate you being here. Appreciate everybody being here this afternoon for NinjaTrader live. We did a lot of stuff today. It was crazy with the guests we have and with really a relatively seamless broadcast for day 3. It's just crazy. Other than my Max Headroom video for a while, but we're good to go. So we're gonna go ahead and wrap it up. I do want to remind everybody, most important message of the day. Please be safe out there and be good to each other. Thanks.